This is Tom Aspray with the Viper Report. Just after the Fed cut rates on September 18th, I put out my last video update of the markets. It's featured on our YouTube page as well as in Facebook, and it was titled, Will Stocks Continue to Like the Fed's Decision? I was seeing signs at that time that the risk was increasing on the long side, and those who had purchased near the panic lows in August should start to take profits. This is how the weekly chart of the QQQ that tracks the NASDAQ 100 looked as that report was issued. You can see we'd had a doji the prior week, which is a sign of indecision. What particularly had me worried was the very poor performance of some of the big tech stocks and the fact that the on-balance volume was declining as prices were moving higher. That was not a sign of strength. We can make this chart current and show that just 2 weeks later, we had a low in the QQQ of 181.82, which was down over 6% from the September 19th high. If you look at an hourly close-only chart of the QQQ, you can see it's been quite a ride. They cut rates. We rallied early the next day, and then it's been pretty much downward, though there have been some massive rallies both in the early part on October 1st, and recently we had another nice rally. I commented last week that the unique AD line analysis pointed to a 50 to 100 point S&P rally, and we got it. Today on Wednesday, October 9th, the markets had a nice strong opening after getting hit late in the day. Once again, trade is in the forefront. It's become quite a treacherous market, but there are some trading opportunities, but you also should be patient, as many traders do not realize that cash is a position, and sometimes it's good to be on the sidelines watching the action so you can carefully pick your entry points. In the September 30th Viper ETF and Hot Stocks report, I pointed out that the daily trend had turned negative in the latter part of September. That's what I was worried about, though the intermediate and long-term trend were still positive. That meant that we should be looking for a correction, but that correction should provide a buying opportunity, and that's where we're at right now. There are several items that go into a good buying opportunity. Now the sentiment of the market has gotten appropriately negative to be looking for a turn higher. This chart shows the weekly chart of the S&P 500. Below that we have the bullish percentage based on the AAII survey and the bearish. You can see that back in early December 10th to be exact, we got down to similar levels that we are now. The market did not bottom for a couple more weeks, so you can't buy or sell just based on the sentiment. You have to wait for the AD lines. You can see right now 21.4% are bullish. That's quite a low level. I'll be updating that number to Twitter followers and, of course, to subscribers to the premium services tomorrow morning. This daily chart of the QQQ shows the doji we formed on September 19th. The following day, September 20th, we got a doji sell signal and the AD line drop below its moving average. As of yesterday's close, it's still negative and shows no signs yet of a bottom, but we know what the signals are, and we could get new buy signals in the next week, or it may take two. If you'd like to understand more about market corrections, I suggest you go to theviperreport.com. On the homepage, you'll see an article called The Survivor's Guide to Market Corrections. It reviews many of the market corrections we've had during this bull market and some of the common things one should look for to signal that it's time to buy once again. I think you'll find it informative, as I've got some great feedback from individual investors as well as hedge funds. Of course, if you're interested in getting along the market once it bottoms out, I suggest you either go to the Viper ETF report or the Viper Hot Stocks report and sign up for a 1 month subscription, just $34.95 a month for each service, and includes 2 reports a week, detailed commentary, and specific buy and sell advice, as well as some trading lessons. quick comment after the close on Wednesday, October 9th. Strong action today. Dow ended up 181 and the S&P up 26 to 29.19. You can see from this intraday chart we did have a sharp sell-off in the last hour or so as Reuters reported that China was less optimistic on trade news. Trade's probably still going to be issued till the technical studies, i.e. the advanced decline line, signals that the correction is over. AD numbers were good today. 1,910 stocks advancing, 998 declining. That's a good sign, but it will take more. Look for another video update this weekend. Have a great week.